Hello all and welcome to Pocket Investing. Today we are going to look at the Quarter 3 results of ICICI Bank. And if we look at the revenue has been growing. It was down last quarter, but now they have made a comeback and it is greater than the last 6 quarters. And if we look at the revenue growth, then in the last quarter their revenue actually shrinked, as we can see here. But this quarter they have maintained a revenue growth of nearly 15%, which is good as compared to the last quarters. Now if we look at the EBITDA growth is falling. Obviously it was at 33% in September 21 quarter, and in the last quarter it was at minus 4.15. But in this quarter they have achieved an EBITDA growth of 8.53, which is again good compared to the last few quarters. And if we look at the PAT growth, the same, they have following the same pattern as that of EBITDA and as that of revenue, and their EBITDA growth grew by 8.53, while their PAT has been grown by 11.62%, which is again great. It is greater than the EBITDA margin. That means they were able to shrink some of the thing and take the ICICI Bank towards more profitability. And if we look at the EBITDA margin, the margin was rising, but this quarter it has fallen, and this might be due to the various factors. And similarly, if we look at the PAT margin was increasing, and again in this quarter it has shrunk. This might be because due to the interest rate hike. So this is something to look for. And now if we want to look at the results as snapshot, so total revenue for this quarter increased by 13.68% year on year, and everything is increasing. You can see net profit for this quarter increased by 31.43% year on year. EBITDA for this quarter increased by 26.04 year on year, and EBITDA margin, if we say, increased from an average of 23.68 over the last 4 quarters to 24.22%. And net profit margin increased from 16.8 to 17.44. So everything has increased, so it is a great result compared to the last few quarters. Now if we want to look at the fundamentals, its enterprise value is nearly 4 lakh crore, while their market cap is at 6 lakh crore. So enterprise value is less and market cap is more, so something to look for. ROE stands nearly at 14 to 15%, which is great. It beats FD return of 6 to 8%, so ROE is great. Return of capital employed is nearly 5 to 6%. This is again great, like how they open new branches and what they provide exciting offers, and how sometimes you have seen that many things that they do, and that's why their ROC is around 5 to 6%. EPS for TTM trailing 12 months stands at 39.21%. PE ratio stands at 22.68%, which is higher than their industry industry PE ratio of 10. So this is overvalued compared to its peers. PB ratio is at 3.38%, and debt to equity ratio 0.08%, which is also good. Now, if we want to look at the shareholding patterns, you will see one unusual thing. They don't have any promoters. Their promoters, like you can say, represented mostly by FII, foreign institutional holdings. And there is an interesting pattern. You can say kind of their promoters are selling their holdings every quarter. So here it was 14.8%, decreased. Here it slightly increased, positive, but then decrease and decrease. Mutual fund in return have been increasing their holding constantly over the last 6 quarters. Retail and others, they have been few selling, but again then there is buying, and few buying, few selling. You can see retail, so retail is kind of confused. And if we look at the other domestic institutions like insurance firms and others, you can see they have sold a little bit of portfolio then again. But if we look at the overall frontier, they have increased their holding compared to the last few quarters. Now if we look at the mutual funds holding, these 5 mutual funds hold the most of the ICICI Bank market share in this order. But if we look at their portfolio, everyone is increasing their mutual fund holding. ICICI Bank holding in mutual funds, only one mutual fund has decreased their holding in the past 3 months, and that mutual fund to surprise is ICICI Prudential Blue Chip Fund. So this is something to look for. If you don't want to invest in ICICI Bank directly, you can invest through mutual funds. And in the last 1 year, it has made a high of 936. It's currently trading at 906 price. Low it touched 642 here somewhere, and it has given almost 20%, we would say 19 to 20% returns in the last 1 year, which is exceptional, which is great in this market. And if we want to see the price comparison, Nifty Bank has given 19.74%, great. Nifty 53%, then Sec 2.78, and Nifty Bank only 2%. So this if you would have invested in Nifty Bank, mutual fund or Nifty Bank ETF, then you would have not been able to generate good returns what Nifty has given. It has given nearly 10%, 10x returns, as that of Nifty Bank, 2% to 20%, nearly 10x returns as compared to Nifty Bank, while Nifty 50 and Sensex is not doing anything. And if you look at the PA comparison, you can see SBI Bank has given nearly 10% returns here. HDFC Bank was negative, as we have seen, and ICICI Bank has given nearly 20% returns in the past 1 year, starting from period October 21, October 20 actually, to October 6 this year. And if we want to see ICICI Bank here from the price perspective, it is trading in the upper limit of their 52-week high at 906 price. It is very less low from the 52-week high, that is 3.2%. So it is kind of in overbought zone. It's, I think, RSI or 14-day RSI is at 64. Now their current price is here, and this is the same price that Analysts forecast. Almost all the 100 there is a 100% buy rating from nearly 50 analysts, and they have given like that by the end of 22 the ICICI Bank will cruise near to 907, and if they are not able to produce good result, then it can go to 768 in October 23. And if they are performing median, if there has been median growth, then they'll be able to achieve a price of 994, which is not great compared to 907. And if there has been high growth from all the perspective from all the ends, then they can achieve a price of nearly 1100. Now, if you want to look at the fundamentals checklist, you can see intrinsic value. Current price is more than the intrinsic value. So intrinsic value is in red. It is a negative here. ROE versus FD return. ROE is great, and it is beating FD returns. Dividend returns, it doesn't offer very good dividend returns. It does offer dividends, but doesn't offer very good dividend returns. Entry point, not a good time to invest. Stock is in overbought zone. So there is something that we want to look for. And then if we want to look at no red flag, the stock is not in ASM GSM list, there is no the management is doing good. If we want to look at default probability, low probability of default in next 12 months, very low debt. And quality check, among the top performance, growth score, it has shown satisfactory performance in growth. So there is something to look for. And then the CEO, so the current CEO and MD is Sandeep Bakshi, as you know. And its term Sandeep Bakshi's term ended on October 3, I believe. And so in the this quarter board meeting, they again have appointed Sandeep Bakshi for next 3 years. So this is another management change that one should look for. And that's it for ICICI Bank Quarter 3 results. And like this video, comment like what you want to know, if I made any mistake, or if you want me to cover any new Quarter 3 results. And please subscribe to the channel.